Dear traders, now I will talk about the in-sample and the out-of-sample periods in the generator. Now if I leave it to in-sample, actually from the drop-down menu you can see that there is 10% out-of-sample, 20% out-of-sample until 50% out-of-sample. If I leave it to in-sample, this means that the generator will use all the historical data we have from our data source. Okay, so it will use all the bars from 3rd of October 2014 till today. It will generate strategies based on this data, okay, over these 99,695 bars that I have at the moment. Now if I switch to, let's say, 20% out of sample, it means that the generator will generate strategies eliminating the most recent 20% of the historical data. I will demonstrate it to you. I will click on start and you see this green zone appears. This is the 20%. And all the strategies into the collection, they will be separated with this green zone. So the thing here is that the generator uses only this white zone and it generates strategies until this moment. So the first 80% of the historical data that we have, and then for the rest 20% it simulates trading like what would be the result if we were trading this strategy on the market. One more time, it generates strategies from the 80% of the historical data, and for the last 20% it shows the results like simulated trading. And this is very useful because we can see how this strategy would perform if we have placed it back some time ago. And I can tell you exactly what is the time if I click on it and I go to out of sample monitor. So the in sample is the white zone, the 80%. This is from 3rd of October 2014 till 6th of June 2018, okay, and the out of sample, the green zone, is from 6th of June 2018 till today. So it's like 1 year and 2 months or something, okay. And you can see that this strategy actually did losses until the end of the in sample part, and on the out of sample part it did great profits. Okay, if I go to the collection one more time, you will see that some strategies, they make profit in the green zone, some of them make losses. Alright, so just to summarize it one more time, when we use in sample, it's like we simulate trading with the strategy, and the generator uses 80% of the historical data to generate the strategies, and for the last 20% it simulates trading. And if you select, for example, 30%, this green zone will be 30%. Now the thing is that I don't want to have into the generator strategies that are losing in the out of sample, right? I don't want to filter them manually, I don't want to close them this way and to spend time filtering the strategies. Now there was an update recently which changed a lot the out of sample. In some of my courses probably you might hear that I was not a fan of out of sample before, but when the update came it really changed my view for the out of sample, and I use it almost every day when I generate strategies. So if I go to the acceptance criteria, you can see that below there is this in sample part which is the 80% and it's called training, and we have the out of sample which is the 20%, the green zone, and it's called trading part. So if I add minimum net profit of 0, or let's say $10, something small, This means that all the strategies will be profitable in the in-sample part, right in the white zone. Now, if I add the same thing in the out-of-sample part, let's say $10 of a profit, this means that all generated strategies, they will be profitable in the green zone. So I will filter the strategies that are profiting in the simulated period. I will remove all these strategies that are losing. Okay, let me go back to the collection. I will remove all of these strategies that are losing right here. I don't want to see them. I don't want to trade with them. I don't want even to test them. Okay, I don't want to spend time on them because obviously they are losing on the unknown historical data. And we call it unknown historical data because the generator uses the 80% and after that simulates trading on the last 20. So this is like unknown data for the program when it is generating the strategies. So by having this filter in the acceptance criteria, we can remove the losing strategies, and this is really great because this way we can filter a lot more the strategies when we are using the out of sample. Simply we can require the strategies that are not just profitable, but for example that have R squared above 70 or above 50, above 60, or any other acceptance criteria like profit factor. For example, we can require from the generator to give us strategies that have minimum profit factor of 1.1 in the green zone in the out of sample part. Okay, this is how it's working. I will show that in the next lectures and you will see what great strategies we get at the end when we filter those with the acceptance criteria and with the out of sample and in sample parts. Alright, thank you very much for watching. Wish you to have a great day. Cheers!